Hi everyone, and now we are going to analyze and see how we trade Ethereum as well as Solana. Now let's understand the recent price action here. Now the price created a strong double bottom here, actually triple bottom, 1, 2, 3, and then the price started creating higher lows, higher lows, higher lows, and all all the sellers' liquidity, the buy side liquidity, was taken out, trapped out, and the price failed to move above this resistance, and thus it creates an area of interest for sellers again. Now at this price action, the price creates a head and shoulder pattern, and it starts creating a lower high, and this creates a break of structure here. You can see, as well as creating two fair value gaps. One is here and the other is here. And now when the price broke down from this structure, it broke violently, taking out all the supports, all the liquidity zones of buyers, freshly buyers at this candle. So it took out all the buyers liquidity, and then it came back up. It tried to push towards this fair value gap, but it was not able to break above this level. So it continued the breakdown. It had an internal break of structure here, and thus created a fair value gap. The price came back above at this level before taking out the liquidity gap at this position. Now we had created a short position on Ethereum at this position when the price came back up, not able to sustain. So this was our position just above our stop loss was just above at this level, and we targeted down liquidity at this zone. So we got a risk reward ratio of 3.8, and the probability of this trade was around 55%. Now looking at another trade that we have initiated, when the price has taken all the liquidity from the buyers at these zones, it has tapped into area of interest for the buyers, and when it has given a breakout of this consolidation phase with a big volume candle, impulsive candle, and it is coming back at the retest of this, we have created a buy side position at 1990, and we will be looking to target 2300, so that the price again goes back into fair value gap. So this is how we trade Ethereum on a daily candle on a swing positions. This is our Solana trade. So Solana was also going into price structuring. As you see, it was creating higher low. It was into a channel. Here also, if you look at the setup, in a long setup, you will see the price taking out these liquidity. It is a liquidity grab, and then creating higher lows, higher lows, higher lows, higher lows. So this is also one of the very high probability, very good risk reward models that if we are able to spot this, you must take. When the price takes out all the liquidity for the buyers, and then it creates higher low there, and it is moving up in the channel, you can assume, or you can think that the price is going to break this structure. The price is going to break this resistance, and now it will create a high probability zone. So your entrance at this area with this liquidity can target this highs. Also, when we are in a winning position, we can look for adding to our positions. Once the higher lows are created, when the higher lows are created, and when the price is moving to give us a breakout above this and taking out all the liquidity of sellers and trapping them, we are going to add into our positions. So these are the two positions that we had taken, and it has netted us 3.63 and 5.42. The total net will be 8R. And if we come to the recent price action, this was the high that was created, and all the short sellers liquidity, all the buy side liquidity has been taken out. This was one of the very favorable short positions that one can take. All the liquidity grab has been taken out. Price came back. It rejected all four different occasion it failed to move past above it, and it gave a breakdown. So once it gave a breakdown at this fair value gap and the price came back, it was a very favorable short position. So entry at this area of interest with stops at previous day candles highs, and looking to target all the liquidity at this side. So we were able to get around 1:6 hour trade. This was on a daily time frame. And let's analyze it on a 5 minute time frame or on an intraday time frame, how we approach it. Now we can see that the price has created this breakout structure and it has created fair value gaps, and there is a buy side liquidity at 134, and it has taken a sell side liquidity. It has taken a liquidity of the buyers at 130. Now what we have done is we have created a long position at around 120, which you can see. It was here also on 20th of March when this liquidity was taken out. If a fresh position is to be built, we can create at this liquidity with a very small and tight stop loss at here, and we are going to target first at this fair value gap, and if it is able to what we can say continue the momentum, and then at second pullback we are going to add another position to target out this liquidity. 1 second. So if it is going move past this here, if it is able to sustain and it is going to move up, and we are going to take this buy side liquidity. So these are the two potential trades that we can take on Solana. So this is how we trade on intraday basis, and this is how we traded on a swing basis on a daily candle, right? Yeah, thank you.